Hello and welcome to the program. Thank you all for joining us as the Monday of October 24, 2022. Just a few more days to the end of this year. I should think about 65 days or so to the end of this year. When did we start 2022? I hope that your financial goals are still intact. Some people will be saying, oh, Nancy, are you not in this country? I know, you know. And all of us are feeling it. In fact, what Nigerians are feeling mostly is inflation, soaring prices. If you buy something today and you go back a week or 2 weeks later, I can guarantee you that prices would have increased. I am Nancy Naji. What's happening this morning? I am Nancy Naji, and this is Moneyline with Nancy on African Independent Television, coming to you live on every 11 a.m. to 12 p.m. That's where you need to be every weekday. So today on the program, we'll be looking at Nigeria's inflation, the impact and the outlook. Nigeria's inflation currently stands at about 20.77%, according to the Bureau of Statistics. That's for September. And the impact side, which we'll also be looking at, is that you know that many states in Nigeria right now are ravaged by flood. In fact, the food belts of Nigeria are ravaged by flood as we speak. Many Nigerians are going to be even suffering health challenges. In some places, the outbreak of cholera has started. That would also impact food because a lot of farmers have lost their farmlands now, and even some crops that have been planted. What will the impact of that be on Nigeria's inflation? The other part is also the outlook for inflation. The Monetary Policy Committee of the Central Bank will be having its November meeting, which will be the last for the year. Don't forget that the last meeting in September, the Monetary Policy Committee did raise interest rates, surprisingly, to 15.5% from 14%. So there was a rate hike of 150 basis points at the last MPC meeting by the central bank. What will the outlook be, in fact, for rates? What will the outlook be for inflation? Because the Central Bank of Nigeria's MPC did justify that rate hike on the basis of inflation rising. And for September, we saw inflation, it did rise from 20.52% to 20.77%. When the CBN's MPC meets in November, will they raise interest rates again? Because I can guarantee you that inflation will rise. So will they raise interest rates again? And I did ask a question, I recall vividly at the September meeting. Thank you, guys. That is the inflation data for 2022. We'll be coming to the news in a bit, but I just want to give you a breakdown of what we'll be discussing and why it is important, especially as now Nigerians are gradually preparing for 2023 elections. I know that a majority of the issues that the 2023 elections will be based on will be centered on two things, in fact, insecurity and economic issues. And like I always say on this program, I don't envy who the next president will be, but what I do know is that the next president needs to sit up, fold the Babariga, and come to Nigerians with a definite plan of how to address the various economic issues, inflation, fiscal rascality or fiscal indiscipline of the government, fuel subsidy issues. What else again? The rise, the cost of doing business in Nigeria. So many economic issues to deal with. Of course, our rising debt profile. According to President Buhari at the budget 2023 speech, he did say that Nigeria's debt has risen to about 42 trillion naira, and that's according to the Debt Management Office. And like I said, it's sometime last week or so, CBN's Ways and Means, CBN's borrowing to the federal government, has increased to about 22 trillion naira, though the finance minister has said that it plans to securitize that over the next 40 years, but it's still busy, it's still debt. And if you add that to Nigeria's debts, it's about 64 trillion naira. Excluding the more borrowings that Nigeria would undertake, for us to stay afloat, in 2023. Anyway, so many issues to talk about, but let's quickly okay, I'll be looking at that issue with my guest in a bit. Gospel Obele will be joining me. He's the chief economist at Strinomics. We'll be talking more about that shortly. But let's take the business news. Moody's Investor Service has downgraded Nigeria's local currency and foreign currency long-term issuer ratings, as well as its foreign currency senior unsecured debt ratings to B3 from B2. Moody's lowered Nigeria's foreign currency senior unsecured medium-term note rating to B3 from B2, putting it on review for downgrading. The downgrade is being driven by a severe deterioration in Nigeria's government finances and external position, which is exerting increasing pressure on the sovereign credit profile despite a significant increase in international crude oil prices in 2022. According to Moody's, the dramatic reduction in oil production in 2022 and the continuation of costly oil subsidies had practically completely eroded. Still, with Moody's, the substantial decline in oil production in 2022 combined with the extension of the costly oil subsidy has nearly completely undercut the boost to government revenue and exports that would otherwise be expected from higher oil prices. The Central Bank of Nigeria has announced the launch of a national domestic card scheme which will go into effect on January 16, 2023, in accordance with its mandate to foster stability, inclusiveness, and growth in the financial and payment system. This was said in a statement made by Osita Wanisiobi, the CBN's Director of Corporate Communication. According to Wanisiobi, the Central Switch for Nigeria and provider of the National Domestic Card Program, Nigeria Interbank Settlement System, will work with the Bankers Committee and other participants in the financial system to implement the program. Additionally, the program can be utilized as a platform for the seamless distribution of government-to-persons payments and other social impact programs, boosting financial access and assisting in the development of a strong and inclusive digital economy. Still with the Central Bank of Nigeria, it says it has onboarded tricycle drivers and traders in Oshodi Market on the eNaira platform in partnership with Busy Mobile Cashless Conduct to accelerate its adoption in Lagos State. The eNaira is a digital currency issued by the Central Bank of Nigeria that serves as both a medium of exchange and a store of value, enabling better payment prospects in retail transactions when compared to cash payments. Speaking at the event, Hajia Rekia Mohammed, Director Information Technology Department, CBN Co-Coordinator, Technical Working Committee, eNaira Secretariat, who was represented by Dr. Khalifa Nuhu from the Information Technology Department, stated that the Apex Bank has carried out citizens' awareness and onboarding of the eNaira platform in many states. Still with Apex Bank, it would commemorate the one-year anniversary of the eNaira tomorrow, Tuesday. Now let's move over to another story. Consumers in Abuja and its environs are unhappy about a new spike in cooking gas prices just 5 days after Nigeria LNG announced a force majeure or a substantial halt in gas production. Earlier this year, the Nigerian Upstream Petroleum Regulatory Commission reported that around 55% of the LPG utilized in Nigeria is imported. A 12.5 kilogram of cooking gas costs 10,500 naira, an increase of 700 naira in just 1 week, and we've seen over 150% increase from last year's price. However, NLNG holds a significant portion of the 45% market share because its management decided to begin delivering 100% of its LPG production to the markets in January. The Nigerian Association of Small and Medium Enterprises lamented over the weekend that many micro, small and medium enterprises are closing shops due to rising economic costs. Dr. Abdul Rashid Yarima, President and Chairman of the ANASME Governing Council, stated that with over 5.1 million members, the number can grow if business challenges such as electricity, transportation and logistics, high import duty, foreign exchange and high interest rates, among others, are addressed. According to NASME, over 600,000 MSMEs would close in okay, I take that again. According to NASME, over 600,000 MSMEs closed in 2021 alone, and no MSME can thrive with a 15.5% interest rate. The planned national Dig Once policy would be unveiled by the federal government by the end of 2022, according to Professor Issa Pantami, the Minister of Communications and Digital Economy. Pantami made the disclosure at the recently concluded 4th Policy Implementation Assisted Forum on Dig Once policy and fiber strategy in Nigeria, with the theme laying the foundation for ubiquitous broadband for Nigeria's economic breakthrough. According to him, the policy will make it easier to construct fiber optic as the backbone of the nation's broadband infrastructure, bridging the digital divide and fostering the digital economy. The federal government expects to earn at least $1.09 billion from the auction of 4 5G spectrums through the Nigerian Communications Commission. This follows the NCC announcement in the new information memorandum on 3.5 gigahertz spectrum auction that it has set the reserve price for 2 additional 5G spectrum licenses at $273.6 million each. According to the NCC, the reserve price is the minimum price for one slot of 100 megahertz TDD for a 10-year license tenure fixed at $273.6 million, or its equivalent in Naira, at the time of the auction at the prevailing Central Bank of Nigeria's rate. The Commission said it is providing the remaining 2 lots of 100 megahertz TDD spectrum in the 3.5 gigahertz band, ranging from 3,400 to 3,500 megahertz and 3,600 megahertz. Now, moving over to foreign stories now, Londoners welcomed the news on Monday that Rishi Sunak looked set to become Britain's next prime minister after his rival and former Prime Minister Boris Johnson quits the race. Sunak, the 42-year-old former finance minister, could be named as the successor to Liz Truss as soon as Monday afternoon. He could become Britain's third prime minister in less than 2 months, having lost out to Truss in a leadership race over the summer following Johnson's resignation. All right, that's it for the news at this time. Let's quickly take a break. And when we return from the break, I'll be taking you through the market rounds for today. Last week, equities market, talking about Nigeria, it closed on a bearish note. What should we expect, not just from Nigeria, but other global markets? I'll be giving you a rundown when we return. Don't forget to join us on all our social media platforms. On YouTube, we're there. On Facebook, on Instagram, on which one again? On Twitter. So connect with us, like, subscribe to our YouTube channel at Moneyline with Nancy TV. We will be right back.
Here is a new and refreshing offer for our esteemed audience across the globe. The new AIT Cloud TV is an online streaming service that offers you attractive opportunities to view our rich, exciting, and entertaining programs anytime, anywhere. AIT Cloud TV is available on the web on www.ait.app, Apple TV, Amazon Fire TV, Roku, and Android TV. You can also download the mobile app from the Google Play Store or the Apple App Store. Simply connect to the internet, download the app, register, and watch live or catch up on unlimited hours of exciting shows. AIT Cloud TV. TV on the go.
Listen to this message from NAFDAC.
The federal government, as we are all aware, has banned the importation of tomato paste. That includes also the sale of it because it is prohibited. You are not allowed to sell.
We went to supermarkets. After our surveillance, we discovered that some of these supermarkets, they are selling unregistered tomato paste because we know that some people, they are importing this tomato paste into the country, which is not allowed.
Don't patronize the imported ones because of the health, imperatives. Because you have situations where some of these people, we are not even sure whether they are the actual tomato from the farm. You are not even sure of that.
My people, when I don't hear true talk from NAFDAC, don't take your hand by with a kill. Buy made in Nigeria tomato, will be 100% natural. Make you eat better, live better life.
All right, welcome back. Let's quickly take you through the markets. Are we good to go, guys? So that we'll take the markets on the wall. Last week, the equities market closed on a down note with the benchmark all-share index closing at 44,396.73 points, a 667 basis points drop from the previous week's close. We've seen that the year-to-date return stayed positive, 3.93%. If you've been following the show since the past few weeks, you will recall that this year-to-date return has, been going further down. Where we are right now is 3.93%. I remember when it was a 15%, and it's just been shrinking. That's it on the wall for you guys. So it's really just been shrinking, and now we are 3.9%. What it means is that from January till date, the Nigerian equities market is still in the positive, but a very paltry amount of 3.93%, while the market's capitalization has settled at about 24.19 trillion. Okay, I can go to the wall now. We expect more cherry picking this week as some fundamentally strong equities remain reasonably priced. For the majority of last week, we saw that interbank rates were in the double digits. And this week, we expect that interbank rates will still be in the double digit. Last week, we saw the Treasury bills market mostly optimistic. Analysts expecting a decline in positive sentiment this week. Last week also, we saw that the local bond market was mostly bearish, with majority of the sell pressure focused on the short to the mid end of the yield curve. Last week also, the Eurobond market was mostly bearish, with sell-offs witnessed across our board. Now, if we move over to the FX window, at the investors and exporters window, the Naira fell by about 7 points last week to 441 Naira 67 kobo to $1 US. That is like the official rate, but many Nigerians are not getting the official rate because where we are right now, the Naira against the dollar in the parallel market, or what we call also the black market, is selling for over 700 and something Naira. In fact, someone told me yesterday that she wanted to make a transaction and they told her 850 Naira, and I was like, I was really shocked, how did we get here? How did we get here? Anyway, I'll be talking more about that during the interview. Now, let's move over to other markets, shall we, guys? Let me start from the United States, really, where we're seeing that stock futures. Okay, these are African markets as of this morning, all red numbers. What is happening? Frontier markets aren't finding it pretty at all. If you take a look at Ghana, Ghana is also in a serious economic crisis. We've seen the Ghanaian cedi against the US dollar falling on its back. In fact, falling very, very flat. As at last week or so, it was trading for around 12 cedis to $1 or something like that, about 14 cedis to $1. The Kenyan exchange too down as at this morning, and EGX 30 in Egypt down 15 basis points. Now let's move over to the United States, where stock futures are falling after Wall Street notches its best week since June. We're seeing the stock futures are falling this Monday. That's just some minutes ago. That's the analysis I'm giving you now. After three major averages notched their best week since June. Let's quickly take a look at European markets and see how those markets are faring this morning, especially on the news of coming in from the UK. But let me take a look at that and see if anything is happening there. Okay, European markets, what you're seeing on the board is a bit mixed. European markets are higher this Monday, with UK politics expected to settle as the ruling Conservative Party picks a new prime minister following the resignation of Liz Truss last week. So that is really filtering into the Eurozone this morning. And we expected, okay, we also saw really, because the market started trading some hours ago, talking about the European markets, and we expect the indices open higher this morning, apart from Spain's IBEX 45 that was a bit down. Now let's take a look at Asia. We saw the Hong Kong stocks and mainland Chinese shares falling sharply this Monday morning, while major Asian Pacific markets rose. What else do we have? Commodities, shall we? Where we do track for you the price of oil, which you know, it's really it's very sorry and sad, embarrassing, shameful situation that at least in the last 1.5 years, Nigeria or oil prices globally have risen. And it's in this time when oil prices like at record highs, that Nigeria isn't making so much money, that Nigeria is borrowing more, that we're having crude oil theft more, that our oil production has reduced, that we're producing about less than 1 million barrels a day. Come on. Huh. I really don't know what to say. Okay, Brent, it's $91.60 a barrel, down about 2.03%. But even at this price, it's still higher than the price set for us in our 2022 budget and even 2023. So what would happen to the remainder? Well, okay, that's not an issue for today. Let me just hold my brakes. What next? Gold is trading down at 1651 USD. They're down 0.27%. All right, that's it for now for other markets. Let's quickly take a break to bring in my guest. We'll be talking Nigeria's inflation, the impact, and the outlook. I know that many Nigerians are groaning, many Nigerians are complaining, many Nigerians are unhappy. Many Nigerians right now can't even eat 3 square meals. It's difficult. It's really difficult. Where do we go from here? I'll be talking about that when we return with my guest after this break. To stay. All right, welcome back. Gospel Obele, who is the chief economist at Streetnomics, is joining me virtually right now from London. Hello, Gospel, and welcome to the show.
Hi, Nancy. Thank you for having me. Good morning.
Good morning. Where should we start from, really? You know, what do you think? Let me start from here. What do you think about Nigeria's inflation rate at 20.77%? According to the National Bureau of Statistics, it released those numbers a few days ago, from 20.52%. How do you think we're doing in this inflationary environment compared to our contemporaries, our peers, and what have you? How do you think we're doing?
Thank you very much, Nancy, once again. Yes, so the inflationary conversation in Nigeria is a bit very different in terms of context. Context also shapes how, inflationary numbers, move over time in terms of the trend and all that. We've also seen a case where there are deeper, structural elements or deeper blocks of issues that has led to the cost push nature of this inflation. On the conventional knowledge, would be too much money chasing fuel goods. That's secondary school level the definition. But we found out right now that there are core structural climate change, COVID-19 related and geopolitics conversations that are influencing heavily on the cost push value chain across commodities, energy prices, food prices, and the likes. Let's also not forget that Nigeria has a very severe exchange rate conversation on the table. Now, when you put that on the table and take into cognizance a very high level import dependent economy, you also can juxtapose and say that there's some form of transferred cost into the economy. Raw materials are much more expensive, semi-finished products are much more expensive. To finish the production value chain in terms of producing for the final consumer is much more expensive. And across the lines, you find out that producers or manufacturers or supply side stakeholders are seeking to push cost on per value of an item. So what all of these things have happened is that it has impacted heavily on consumer spending at the core of the consumer pocket, which is the everyday Nigerian. So the inflationary conversation is a mix of many narratives that has come together due to some very key either fiscal indiscipline or very poor or weak monetary and fiscal policy alignment, or very, very insensitive approach to seeking to solving the inflationary challenge. For instance, the central bank trying to just increase interest rates. Interest rates are monetary instruments used, or monetary tools used to deal with inflation that is sort of monetary driven. Or you understand what I'm trying to say? Because the current inflation we're faced with is not necessarily monetary in its nature and in its design and in its function. It is more structural, it is more geopolitical, and a lot of other variables outside just monetary. So seeking to use a monetary instrument like interest rates to solve for reducing inflation numbers isn't sufficient enough. It may be necessary, but isn't sufficient in context. So the challenge is here to stay because there are a lot of enablers, like I mentioned earlier on, that are fueling or reinforcing the position of this cost of living crisis. Let's not also forget that we're moving to a new year. Elections will be running through the first quarter of 2023. We're gradually getting close to the Christmas or holiday season. And all of these dynamics, when you put it together, plus the recent flood issues in Nigeria, there's going to be a huge supply chain crisis. And with that supply chain crisis also comes, significant transferred cost push impact on the average Nigerian consumer, which is what we find as inflation rate. And let me also say that it's also very important for us to take into consideration that even if the numbers reduce by 0.5% to maybe 20.2 percentage or 20% in December or something, it doesn't necessarily mean that inflation has dropped. It only means that the rate of inflationary increase has slowed down.
Yeah.
All right. So inflation is the concept that talks about increased money in circulation in quotes, but inflation rate, measures the pace at which prices are increasing. So even if inflation rate drops, it doesn't necessarily mean we've done better. It means the pace of the increase in that rate, or the pace at which that rate has been increasing, has slowed down.
Okay. Gospel, let me dissect what you have said. Out of all the reasons, and I agree with you, is both internal and external, but out of all the reasons which you've attributed to Nigeria's inflation skyrocketing, which out of all those reasons do you think is the most significant, that is the most significant contributor to Nigeria's inflation?
I think they're mostly structural reasons. And this is why I say structural. Structural because at the end of the day, I mean, the weight or the pace of that inflationary rate increase is still a function of the structure you have on ground, to either manage global impact or to pace the impact of global shocks on your local economy. So take, for instance, the Nigerian economy is not primarily a productive economy. All right, we may say GDP has grown and we've recovered coming from the pandemic/recession in 2020, but technically, GDP growth does not equate economic productivity. All right, GDP, the concept of GDP talks about economic activity, but you agree with me that activity doesn't always equate productivity in context. So there is more around the structural issues that hasn't made us productive enough. And until we become productive, we will not be able to do more for the non-oil sector players, and then gain some form of foreign exchange receipts from the non-oil bit. Plus the fact that you don't have a strongly competitive, productive environment to do business. All right, power is still a big issue. Education is still a big issue. The quality of the average Nigerian, the quality of life for the average Nigerian is still a very big challenge. So the core for me are the structural issues. And until there is some form of significant structural reforms, not necessarily holistic, but impacts, dealing with all the issues, impact, and then summing up holistically, we may not be able to find any firm positioning to manage global inflationary impact on the local economy. So I would attribute it majorly on the first bit to the structural issues that we're faced with, because at the end of the day, even the Naira conversation, the dollar exchange, and all those things still comes back to the fact that we are structurally misaligned on many fronts.
Okay, the question now would be, how do we temporarily solve the structural issues to bring down inflation? Because I understand that when you're talking about the structural issues, for example, you would mean the insecurity issues that are also threatening our food harvest. You would mean infrastructure. You would mean even the cost of doing business. You would mean transportation, logistics. You would mean, for example, in Abuja, we've had fuel queues now in the last 1 week or so. You would mean that food products or even traders, marketers can't get their goods across states or across regions. If they do get their goods across states or regions, the transport fares are increased. That transport fares will be transmitted to the end consumer. So how do we temporarily solve these issues, bearing in mind that these structural issues are not also issues that you solve in one day?
So I take that into consideration, that they're not issues that you solve one day. But however, Nancy, if you take it to cognizance, these structural conversations have been ongoing since the 70s, since the 80s, since the 1999 dispensation up until now. And that's to tell you one thing is very consistent. The willingness, because I mean, a lot of times we already know what to do to a very large extent, but the willingness and the cultural ideology around governance in Nigeria does not enable for these structural reforms. Structural reforms are very difficult, but then again, if you don't do them when they need to be done, or as soon as you can get them done, it will keep piling up in terms of complexities going forward into the future. So first off is the ideology. Currently, the ideology around the overall management of the Nigerian economy is strongly extractive than inclusive. Extractive will mean that the process, the institutions, the policies are designed in many cases, either designed to fail or not properly designed to make it work. Or even if it's designed to work, the institutional elements to make it work are weak in such a way that they cannot carry on those policies and fully execute them. And that's why you begin to talk about the constitution. That's why you begin to talk about restructuring the Nigerian economy. Many of these issues, like you mentioned, cannot be solved in a day. But if you take these issues in pockets, they can be solved quickly, because you already have institutions who are attached to those problems. You already have state governments who are attached to those issues in that different context. And if you look at it from that context, it's a lot easier for institutional stakeholders to affiliate with the reform process in their own space. So trying to manage everything from the center and having a lot of states that are not commercially viable, to effectively contribute to competitiveness is a dead on arrival, when you want to consider structural reform and trying to get structural reform to hit the ground running in context. So first off is for us to look at governance from the angle of an inclusive ideology, and such a way that you can also break down the process to give power to other primary stakeholders to lead reforms in their own beats and help reforms become more contextualized and ensure that the instruments that goes into financing these reforms are properly designed in the first place. For instance, the Nigerian budget, and not just the designing of this instrument, the institutions through which these instruments will flow. So even if you have a Nigerian budget properly done in terms of budget reforms and all that, what are the institutions through which these monies will be spent? All right, because a team is only as strong as its weakest link. So if you have weak institutions, then you're gonna have budgetary failure or public finance failure in fueling up reforms. So it's very connected, but we've also realized that a lot of institutions and stakeholders are primarily responsible to drive reforms in their bid. So if you help these institutions own up, if you revamp the ideological perspective, financing is made available, the cultural behavior around reforms is also in place, we'll begin to get these issues done one step at a time. A very quick win we have right now in the Nigerian economy is to organize the service sector. The service sector contributes almost 60% of the Nigerian GDP. We can make that sector more productive and position it to earn foreign exchange or foreign receipts in context. A lot of Nigerian web developers are now doing a lot of freelance work, but we don't even have data to tell us how many web developers we have in Nigeria that work freelance across borders, sitting from their houses in Lagos or in Rivers State, as the case may be. So we need to first organize what we have, to make the most of what we can within the short term as a low-hanging fruit. Then look towards enabling the non-oil sector for exports. A lot of SMEs have very good products, but they cannot export, because of the value chain complexities around access to markets and access to finance and competitive products. So they are low-hanging fruits, but then again, there are also core institutional elements that can be attached to key sector reforms, and we can drive it from there. So it's very doable, and it's doable within 4 years of any government seeking to really create change.
The next question really for you should be around the calibration of the right policy. We understand that it's the fiscal authorities that will fix the structural part which you've talked about. And you mentioned earlier that there's really nothing or little that the monetary policy can do to fix Nigeria's inflation because of these challenges we're having that is structural. But what kind of calibration of policies, especially from the fiscal and fiscal, the coordination that you expect to see at this time? The MPC at its last meeting increased interest rate to 15.5%. I don't know what it's going to do in November because I asked the governor of the central bank that same question last month, that if inflation is increasing, will you keep on increasing? And he did tell me that, okay, let's wait and see, Nancy. And now we're seeing that inflation is increasing, and flooding in Nigeria now is not helping matters. So perhaps by the next MPC meeting in November, we will have October inflation, which may likely increase. So perhaps we may also see an MPC that, would increase the rate. So how should the authorities right now sit down at the table to calibrate and say, guys, we need to bring down inflation fast, and how do we do that?
Thank you very much, Nancy. So yeah, as much as structural issues may seem more fiscal rather, we cannot also take out the place of the role of the monetary institution. A lot of times we're talking largely around complementary efforts and aligning or even effective compromise, to lead necessary reforms. So yes, the monetary institution come in very handy in leading structural reforms, especially on the angle of financing and on the angle of enabling the capital markets, the financial sector as a whole, positioned towards reforms and enabling more market growth in that context. However, to answer the question, I think it has to do around more alignment. The fiscal body needs to pick up on its own core strength or core assignment areas and ensure that to a very good degree, because we can't get it working 100%. Anybody that says that it can get working or it's not going to work 100%, because then again, you have humans with interest in these systems. All right. So the first bit is to ensure that the fiscal bit are a lot more disciplined in the approach. The ideology that governs institutional spending, institutional policy design, and all that are a lot more inclusive. Take, for instance, now the average MDA is seeking to chase, is seeking to, how will I put it now, raise more revenue for government than seeking to enable or support SMEs, in developing and becoming better at what they do. Right? There is already that. So we need a shift in ideology, on the fiscal side first. When that begins to happen, then the behaviors begin to change, and then the policy approach, the support approach, the enabling business approach begins to take the center stage. And we begin to see that reflected in policy instruments and all of that, needed to drive the right structural reforms. We also begin to see that in what the government wants to prioritize on. For instance, now, within the past few years, we've not seen a very key approach in terms of helping the non-oil sector scale and do more for the economy. So there needs to be a change of body language, a change of policy and institutional representation when it comes to the non-oil sector, as a key touch point to power growth and all that. Then on the monetary bit, there has to be a lot of restructuring in the financial sector. There has to be a lot more collaboration in terms of seeking to work with fintechs and other innovators within the space to unlock growth productivity in that space. All right. And if you bring the two somewhere in the middle in terms of alignment now, it has to be complementary. All right. And complementary based on the priority sectors that can engineer growth and development inclusively for the average Nigerian. All right. So that should be the focus. How much can we work in such a way that we can at least either find a fair compromise or a win-win compromise, and then scale that on the grounds of the sectors that are priority for investment, that can help unlock productivity and can help unlock prosperity for the average Nigeria, built on the grounds of changed ideology and reworked cultural behavior within the system. These things are very important, because if you put the argument on just infrastructure alone, it's also very insufficient, because we realized that many times the will and the behavior can frustrate the use of these instruments in achieving economic goal and advancement. So we need both soft and hard processing by the institutions at the table in terms of fiscal and monetary now to make it work.
Okay, Gospel, I'm also looking at my time, and I have a lot to talk about with you. We have about 10 minutes to end this show, so let's just do it sharp and concise. You talked about promoting the non-oil sector, and what came to my mind is that we've seen interventions, especially even during COVID, and now that the world is a bit slowed down on COVID measures, we've seen interventions, especially from the monetary policy side, to promote the non-oil sector. Aren't you seeing some of those gains? Because, okay, now we've seen the intervention of the RT 200 billion, the race to $200 billion to get from the non-oil sector. We've also seen the 100 for 100 policy, for example, by the Monetary Authority to also help, prop up the sector. What do you think about those? Of course, those policies are on now. Is it that we are not seeing as fast result as we were expecting very quickly?
Those policies are very sound and very great initiatives in themselves. But I also question the inclusive nature of those policies. How many Nigerians doing business can you identify that have benefited from those policies? How were they designed? How were those monies transmitted? Are there core feedback and impact evaluation mechanisms? And was it available openly and inclusive for SMEs or stakeholders or beneficiaries in the space? That's the very big question. And until that begins to happen, we may not be able to see the results. And how many of these SMEs or these beneficiaries at the end of the day were held accountable for the finance or the support they receive from the central bank? And also, the central bank needs to also do more around accountability and transparency, publicizing, because anybody from central bank can say, oh, this money actually went out this money actually went out to actual SMEs. But then we need to see the names of the SMEs. We need to be able to see the impact, how many jobs it created along the lines of these SMEs that got these grants or these benefits, and then what are the impact on the local economy where those SMEs are situated. So there has to be a very clear assessment. Otherwise, social intervention can be used as a tool to influence extractive institutions. So that's the big concern here.
Okay. Okay, Gospel, we will take a break now, Gospel, and when we come back, we'll continue the program. Just still hang on there. Let's quickly move over to Port Harcourt. There's a live broadcast that would go on shortly. But Gospel Obele is the chief economist of Streetnomics and is still joining me. Okay, Gospel, let's move ahead and talk about how can the expectation of an average Nigerian be anchored so that we don't really freak out, you know, because it's like every Nigerian is freaking out right now on these inflation numbers that seems to be increasing every single day. I mentioned at the beginning of the program, if you go out today to buy something, next week, next 2 weeks, you go out, you will not be buying it at that same price. So how should the expectation of the regular Nigerian be anchored so we don't freak out?
To be very honest with you, a lot of Nigerians can't do anything about the situation right now on the external, but they can do something on the internal. For businesses, it's very important. I was in a session yesterday and I was mentioning that it's very important for businesses to begin to rethink their models, right? The Nigerian market, the opportunities still exist, but you may need to rethink your model. What social cause related positioning can you begin to get into, you know, to raise your revenue bar such that you can, or your revenue streams, such that you can cut off from the cost impact, you know, pricing, promotions and products and all of that needs to probably align within the context of how cost of living crises are shaping consumer behavior for businesses. So businesses can do more within exploring more market opportunities, exploring newer models to do business, and also rethinking how they can get their products out, you know, across the borders in Nigeria so that they can be steps ahead of the cost pressure happening right now in the country. Let's also state on the other side of things, the average Nigerian has to also rethink more money, more income streams. All right. 1 or 2 income streams may not be enough within the times we're living in. So more income streams, number one, and rethinking investments in assets that can help their Naira savings appreciate, or their Naira, whatever, their disposable income appreciate. So there is need for the average Nigerian to spread out and rethink other options to make more money in order to stay afloat, because the situation may not get any time easier within the next 1 year. And that's the truth.
Okay, you've brought me to the next question, which you answered a little bit, but let's dig deeper. Because I wanted to ask you what, as Nigerians, we are supposed to do with the Naira with us in our pockets right now. Because it seems that the Naira's value is always eroding every single day. And you touched on it a bit in terms of, okay, you've got to invest in assets that will give you returns. But there's also this school of thought that many Nigerians now, or some Nigerians that have the wherewithal, are, you know, exchanging their Naira for dollars and storing dollars as a means of value, which is also in a way talking about speculation of the currency, which is also in a way depreciating the Naira. Those that do not have that wherewithal, how do you think, or what do you think we should do with our Naira at this point? You talked about investment. I want you to dig deeper to say what type of investment. Definitely, I would say not Ponzi or pyramid schemes. I need to,
Definitely.
you know, say that.
So, what type of investments? I mean, it's very simple. I mean, because if you leave your Naira saved in the bank, it's actually depreciating and it's worth off in terms of value. All right. So investments are very important. I mean, there are little mini, for instance, this is not trying to advertise for them. There's Money Africa, for instance. Money Africa does a lot around financial education. For as low as 30,000, 50,000 naira, or even 10,000 naira, people can put their monies in some mini stock investments and all of that, or they can be better educated. Don't forget, Nancy, there's also a financial literacy gap we're dealing with in Nigeria. And it has nothing to do with whether you have a BSc or not. It just has to do with financial literacy. So as little as 10,000 to 20,000 naira can be invested in little stocks here and there, you know, when that education is right. That's number one. On the second bit of things, it's also important for Nigerians to begin to look out for, you know, little businesses they can start within their local community, or people they can partner with to start new businesses. I mean, at the end of the day, when you go and get stuff, the top 6 collaboration. All right. So the average Nigerian should begin to live with an open mind, to collaborate, to put resources together with other people and do some form of grand level investment into real estate or other sectors, or open new businesses that are resilient, that are technological driven, that require less manpower and that require less, you know, brick and mortar engagement or moving across the value chain, you know, challenge, as it were. So Nigerians can probably do more around collaborating to invest in technology-focused businesses, or own equity in small technology-focused businesses. And these are things that are available to the common man. But the problem is that the average Nigerian is not necessarily financially literate. And that's where the big conversation is in this context. And you need to be first financially literate to know where you can, how you can spread your little money you have to make more out of that little. Otherwise, even the little you have will be reduced to nothing.
Okay, Gospel, as we end the show in about 2 minutes, I need to ask this question, which is the gap that we've seen between our own policy rate, which is at 15.5% right now. Do you think that that gap between our own policy rate and the Fed, as well as the ECB, which is the European Central Bank, play into a reaction function of the Central Bank of Nigeria, in the sense that if you expect the global banks to raise rates, our own central bank also raises rates? What could be your outlook, even as we are just a few weeks into the next MPC meeting that comes up in November?
I mean, there's a high level chance of increasing interest rates because, I mean, globally, the world is increasing rates on a spray. But the actions of the central bank, and even a lot of central banks in the world today, have been largely reactionary. Like I mentioned earlier on, you cannot use an interest rate monetary policy instrument to deal with an inflation that is not primarily monetary designed. But then again, there's also a bias, by central bankers with the need to protect the financial markets and the capital markets, at the risk of leading the real sector to a major crisis. So there's also a form of inequality that is evolving, from the use of interest rates as a tool currently, and that's going to play out in the coming months. Very soon, the financial market may be stronger for it, but the real sector will suffer for it. But I mean, in the context of Nigeria, I think we just need to look inward and begin to think of other ways we can sort of manage our own problems, beyond just interest rates. But although I do not see that action from the central bank, it's likely been conventional, with the use of interest rates. However, what all of these things tells us is that I do not think that we are ready to face or to face or interact with the big monster in the room, which is a looming recession happening as a result of the worsening cost of the cost of living crisis and the worsening standard of living situation. The central bank has to think beyond, outside the box, and look for other ways to collaborate with key institutional stakeholders to do more for the local economy than just increasing interest rates.
Thank you very much, Gospel, and thank you for bringing that. I've also mentioned it several times on this show that we also need to take into cognizance the looming recession, especially in global economies, and how that might likely put the brakes or even slow down our own economy. And I'm not even seeing any kind of reaction yet, apart from like the monetary authorities to avert that. But thank you, Gospel, for joining us today. Thank you for your time. Thank
you for having me, Nancy.
All right. I've been speaking with Gospel Obele, who is the chief economist at Streetnomics. We've been talking about inflation in Nigeria, the impact and the outlook. The core of this conversation is that you need to be financially literate, seek information so that you know what you're supposed to do with your naira. Because the naira you have in your pocket or the naira that you have saved in the bank right now is gradually eroding by the day. So seek investment education from the right sources, not Ponzi or pyramid scheme. I am Nancy Naji. Be the best you can be and be that change that you want to see. Bye now.
In River State under the PDP. There is also other dignitaries who are here. They're very much involved in the entire process. Like I did say that Amopu Senibo Siminilaye Fubara the governorship candidate of the PDP, is also here. Also, the deputy governorship candidate, People's Democratic Party, PDP, Dr. Mrs. Ngozi Odu, she is also here. We also have alternate chairman, PDP. All right, the national anthem.